So first of all, do you think that the rally that we've been seeing during all these last weeks in the U.S. stock market, it's going to continue?
I think it's a very frustrating rally because it's not being confirmed by a lot of volume. A lot of what you'd like to see in a rally like this is a lot of volume, which would indicate that there were large asset managers putting money to work. That has not been the case, and so it leads me to believe that the rally is really being fueled by excess liquidity in the system, by central banks around the world that keep pumping it full of liquidity to help the markets. That being said, it's forcing the risk trade, forcing money into risky assets, equities and gold being of the two, right? So I'm not a real buyer yet that I think it'll continue. I think we're ahead of ourselves. I think the market's going to turn and actually move a little bit lower first, which wouldn't be a bad thing. Listen, we're up 8% year to date. We're up 25% off the October lows with really no pullback at all. So, seeing a pullback would actually be a good thing.
And do you feel there's any comparison that we can do with this rally or this up in the markets with the one that we saw in the 80s with after Reagan years? Or do you think it's going to be that of a big market?
No, I think the Reagan years were just an incredible time in the markets. I think the markets today are not reflective of those years at all. I think so many things are different today than they were then. And like I said, I think a lot of this rally has been really fueled by the excess liquidity. Listen, we saw what happened. When they did QE1 in this country, the market rallied. The minute they stopped, the market pulled way back. Then they did QE2, the market rallied. The minute they stopped, the market pulled way back. Now, we're at a different time in the economic cycle. Maybe it's a little bit better than it was, but the sense is clearly from the central banks that the markets still need help. And so my concern is that they're going to have to keep going. And at what point do the central banks around the world pull back? How much money can they print to keep this rally going? And that's the frustrating part.
And are we going to see the Federal Reserve another QE3 with this macroeconomic data that we are seeing lately, that it's kind of positive?
Well, what's interesting is that, the data comes in mixed, more positive than negative, but it continues to be mixed. Now, last week, we saw on Tuesday, the market backed off 200 points. It was the first three-digit move we had all year. Immediately Wednesday morning, in the newspaper, you had the Fed talking about, sterilized QE, which is kind of a new form of another quantitative easing package, right? The minute the market sold off. So what that really tells you is that the Fed is quite concerned. They don't want to see this market pull back. And quite honestly, we're in the middle of an election year in this country, right? You don't think the Democrats, and you certainly don't think that Obama wants to see the market under any stress. And so I'd be very curious to see whether or not they really allow the market to kind of trade on fundamentals versus trading on stimulus, which is what it's doing right now.
And what's going to happen with the oil prices? How are going to impact the stock market here in the U.S.?
Well, if oil keeps moving higher, that's just going to cause, it puts pressure on the economy and on the U.S. consumer. And the U.S. consumer is still feeling some pain from this recession. Things in this country are not back to normal by any stretch. Jobs are still hard to come by. And so if oil keeps moving higher, it's going to, in my opinion, is going to be one of the headwinds that causes the market to pull back.
And just a last question, how do you feel about Europe right now after all the new developments that we saw in Greece? Are we going to see on any other countries in trouble, especially talking about Spain?
Yeah, listen, here's what I think. I think that Europe at the moment has kind of pulled off this restructuring, right? They got all the bondholders to buy into it. They've elected the CDS product, so everyone's going to get their insurance paid. So that has calmed the markets for sure. I think the ones you really have to worry about are Portugal and Ireland coming to the table saying, hey, listen, we want the same deal. From kind of a perspective where they want the same. Italy and Spain, I think, are different issues. Now, Spain, yes, continues to be under pressure. Its economy continues to be under pressure. But I actually think that Spain and Italy are okay. I think the ones that are going to cause the problem the next time, and it won't necessarily be a big problem, but it will still be a problem, are going to be the smaller countries of Portugal and Ireland looking for the same kind of relief that they got from Greece. And I think if the global economy continues to move in the direction that they say it is, and if they can get oil to kind of pull back a little bit, then I think it'll be a slow process out, but I think that Italy and Spain will, in fact, be okay.
And just a last question now. Should we go into financials now that the stress tests are going to be announced, some dividends going on right now? Should we go into banks?
Listen, I happen to like the financial sector at the moment. It was under so much pressure last year. I've been a bull on the sector. I think that the results this week about the bank stress tests, I think they're going to be more detailed than they were the first time around. I think it's going to show that in fact our banks are stronger than they were. I think we'll start to see some banks either start buying back stock or increasing their dividends, and therefore I'm bullish on the sector. So I actually think the sector is probably one of the bright spots in the U.S. economy.